Following for a couple of weeks now, certainly actually ever since Chevron unveiled a $65 deal to acquire Anadarko, and I had reported that Occidental was there with a higher bid. Well, there'd been questions as to who would prevail here, whether, of course, Occidental would choose to come public, as it did with its bid, and then that bid a few days ago having been made or deemed superior by Anadarko. The question then became, what would Chevron do? And now we know Chevron has bowed out of the bidding, choosing not to compete with that superior proposal from Occidental, Jim, saying they're going to be disciplined. And in fact, I spoke to Mike Wirth a few moments ago, the CEO of Chevron, who said, listen, this is a commodity business, and you need to be aware of what things look like in a down cycle. You need to always run the models, he sort of implied, of what the risk looks like with low oil prices. And it simply seemed to be a line they didn't want to cross. Where that line was, whether it was 65 as their deal was, or whether it was 68 or 72, he would not tell me what their return parameters exactly look like. But he continually said during a conversation we just had that we had a line in mind as to what makes sense. This crossed it, and that winning, in any environment doesn't mean at any cost, given we are in a commodity business.
I thought that was great. I mean, what people forget is that a lot of oil people, all they know is to go full throttle, okay? Because that's what they do. They don't have any market. No oil company has a marketing department. So Chevron is very wise to say, okay, look, these thousands of wells we're going to drill in Permian, they're short cycle wells. Maybe people feel Scott Sheffield from Pioneer is out saying, listen, they have to do some deal. But the problem is all the other companies that they might look at are all rationalized. And Anadarko was very undermanaged. And that's a polite way of saying, they had a lot of acreage. They weren't doing anything with it. Remember, they had that terrific LNG plant, which is really would have been great for Chevron. Chevron, David, is a deep water driller. They're the best there is. Everybody knows it. They did a lot of Gulf of Mexico drilling at the time of Macondo. Those are all hitting. Those are long live wells. People think they have to do a deal. I don't know. They get some more Gulf of Mexico shelf. They don't need to do a deal.
You know what Mr. Wirth saying to me, that when I asked him that very question, not necessarily. He said in the Permian alone, we're doing 300,000 barrels a day right now. By 2023, we'll be at 900,000 barrels a day without adding any acreage, without doing anything.
That's half of the
And so, at least in Mr. Wirth's, of course, there he is, the CEO. We don't need to do a deal. We will be disciplined. Doesn't mean that they won't, Jim, to the point you've been making.
Right.
But clearly they are going to do it within the return parameters they see as being optimal for a commodity that does go up and down.
Well, I like the fact that Chevron has always used reasonable assumptions. What makes money at $50 oil? What makes money at $45 oil? Some of the oil people just say, what makes money for oil? Well, whatever we sell it at. And that's not been that great. One of the things that we hate about the oil companies, and when you talk to David Demscher, who's he's this technologist of oil, because he runs Core Labs, he said the big change that people have done, the oil companies, is they're no longer, if they don't please Wall Street by saying, you know what, we're not going to overpay, we're not going to spend, then their stock goes higher. If they go nuts with spending, then their stock goes lower. Wirth would rather explore oil with his stock price of $5 billion buyback than he would in the Permian, because he knows that nobody's getting any credit if they borrow a lot of money in this environment. It's really rather amazing.
Yeah.
The companies that borrow money have been punished.
Well, let's talk a bit before we get to the broader market, of course, about Oxy this morning, because listen, this is also a big victory for Vicki Hollub, who chose to do something unexpected in that you don't typically see a company, even when they were the higher bid perhaps in the auction that took place privately, come public. They did. And then she just set out to basically say, in her actions as opposed to her words as well, we're going to win this thing.
Right.
The Buffett money, which you've criticized, but which she got very quickly. The plan to sell $8.8 billion in assets to Total.
That was
the plane
brilliant.
was in Rotterdam yesterday, too. Maybe some more asset sales for Shell. Who knows? To Shell.
Shell's got a lot of money.
But the point is, Jim, she prevailed here. And clearly sees incredible value in this property and believes that it is the deal that she had to do in order to make Occidental, the largest single producer potentially in the Permian.
Well, let me tell you why I'm more concerned about Anadarko and why my travel trust wanted to sell it before we got really lucky. David, Colorado had an interesting ballot, something on the ballot about not drilling more. You know what, David? Oil companies aren't liked in this country. And if that goes back on the ballot again, that all that Colorado acreage that also really is very good for Anadarko, you can forget about it. Now, the Permian is great, and I love it. But you know what, David? I know that she prevailed, but the cost of her prevailing really is going to turn people off to her stock.
You think so?
Yes, I do. You have
even though she told a potentially very compelling story in terms of what they see in terms of synergies. Remember that $2 billion number?
Well, she wants to be the Permian company. But, David, I want oil companies to spend less. It's not been a great thing to spend more. That's just been getting clubbed. Now, I mean, if you take a look at what Scott Sheffield's done with Pioneer, he's done it with equity offerings. That's so smart. You know what he pointed out this morning? Diamondback Energy. They do not spend outside their means. Now, is Chevron spending outside its means? No, because they're selling those properties. All I'm saying, David, is when you take 8% money, you don't really, I don't care who it takes. The bank is not relevant to me. Elon Musk bought money from Goldman, and they had to sell on it.
Understood.
Look,
They got the money fast, and it got them the win.
Well, that's
great.
great.
And they say it's going to be highly accretive, $3.5 billion of free cash flow improvements through synergies and capital reduction. Remember, the bid, by the way, is 78% of which is in cash. So 59 in cash, the remainder in Oxy stock. So not a great deal of stock.
Tell you?
So it's not necessarily pressuring the overall value of the deal that much, even though the stock is being sold aggressively this morning.
The stock was being kept up by the hope that Chevron would come back and she wouldn't buy it.
Yes, it was.
Now, yes, there's synergies. But I'm telling you, as someone who follows this intensely, David, people do not. Yes, because the ones that do well, this is from David Dempster, not me, and he knows more than I do. The ones that are doing well, the oil ones, are spending within their means. Now, you could say that Oxy's spending within its means. I say there are now two classes of stock. There's the Buffett class, and there's you, the common shareholder. And that's not what people want in the patch. Now, maybe she doesn't care short-term where her stock goes. David, that is a dicey thing.
You know what will be interesting is in the weeks, months, and years to come, you and I will sit here and we'll be able to
We'll debate it, and people will say, wow.
And eventually we'll get the answer. Yep.
Just at the time of tariffs and Uber, you're stuck on that? You little thinker, you?